I'm Getchin Share with Homestead Realty, and I thank you for watching. And if this is your first time on this channel, please consider subscribing and click on the bell to be notified when I post new videos. In this episode of Let's Talk Real Estate, I will go over 20 questions, multiple choice questions, designed to help you pass the Florida real estate exam. Let's get right into it. Part 18, taxes affecting real estate, 3%. Number one, when filing itemized income tax returns, homeowners may deduct blank, 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 and blank, blank paid. Well, here we're talking about real estate taxes and mortgage interest paid. When filing an itemized tax return, you can, if you own a home, you are allowed to deduct real estate taxes and mortgage interest that you paid. Now, that is if you are itemizing. Number two, real estate taxes are blank, blank taxes. Well, that means ad valorem taxes. Ad valorem means according to the value. So real estate taxes are based on the value of the property. Number three, the county property appraiser determines the blank value based on a property's blank value. That is what I just shared with you. The county appraiser determines the assessed value based on the property's just value. So the just value of the property is what's driving the assessed value. The assessed value is what the county appraiser assessed the property for, and based on that just value, you are paying taxes based on that factor. Number four, government-owned properties used to provide government services is said to be blank from paying real estate taxes. Well, if you can imagine, government properties, it doesn't make sense to pay taxes on government properties. Theoretically speaking, government properties are owned by the public at large. So if we own the property, there's no need to pay taxes on properties that we own. So therefore, government properties are immune from property taxes. Very simple. Number five, church-owned property is blank from paying real estate taxes. In this case, church-owned properties are exempt from paying taxes, meaning they are assessed, but they don't have to pay taxes, assuming the church is functioning in its proper manner. So they don't have to pay taxes. And that applies to also 501c3 or non-profit. Number six, the basic homestead tax exemption allows a deduction of blank from the assessed value. Here, the basic homestead tax exemption allows a deduction of $25,000 from the assessed value. Simply put, the first $25,000 of the property value is tax-free. Pretty simple. Number seven, a veteran with at least 10% military service-connected disability is eligible for an additional exemption of blank when calculating taxes on homestead property. Well, here, if you are a veteran and you have a service-connected disability of 10% rating or higher, you are entitled to an additional $5,000 tax exemption. So you can see the basic exemption is $25,000 plus an additional $5,000 if the veteran has 10% or greater disability. So the total will be $30,000. Number eight, the total basic tax exemption for a non-veteran cannot exceed blank. Here, it cannot exceed $26,000. Let's take a look at it. So the basic exemption is $25,000. And if the person is a widower or widow and they have not remarried, that person has not remarried, they get an additional $500. And if that person is also legally blind, they'll receive an additional $500 deduction. So when you combine 25,000 plus 500 plus another 500, assuming the person is both a widower, has not remarried, and is also blind, legally blind, then in that case, they will have a total of 26,000 for the basic homestead exemption. Number 9, the maximum rate of interest on a tax certificate is blank. Well, in Florida, the maximum interest that the county or city will pay on a tax certificate is 18%. And of course, it's an auction, and the auction will start at 18 and go down from there. So it'll start at 18, 16, 14, 12, and it'll go all the way down to the minimum that a person is willing to accept. Number 10, 1 mil is expressed as a decimal is blank. Well, here, 1 mil, if you have 1 mil, just keep in mind, 1 mil, millage rate, is basically 1 per $1,000 of value when you're calculating taxes. So if you have 1 mil, you will move the decimal point 3 places to the left. So therefore, 1 mil will be written down in decimal as 0.001. Let me take a moment to say thank you for supporting. And if you have not subscribed, it's very simple. Just hover over that picture at the bottom of your screen and click subscribe, and you can check the bell to be notified when I post new videos. Number 11. What is the purpose of the Greenbelt Law? So the Greenbelt Law basically required agricultural land to be assessed at its current use rather than its highest and best use. What is that saying really? The Greenbelt Law is intended to protect farmers. And if a person is in the process of, if they're in the business of feeding the nation, well, they could have developed the land and make a whole lot more money. But since they choose to produce food for the nation, there will only be assessed based on the current use of the property, not its potential highest and best use. That is all. Number 12, when the city or county sells a tax certificate, a sale of the property may take place only after the certificate has been outstanding for how many years? Here, let's take a look at it. So I'll highlight the key words for you. When tax certificates are sold, the sale of the property may take place after 2 years. That is very simple. So when the city, let's say a person is delinquent in their taxes, the city may sell a tax certificate, and the person who purchased that tax certificate, they will wait 2 years before that certificate mature. And once it's mature, after 2 years, they can claim, they can claim their return, and therefore the government will auction off that property. Well, they'll move to quiet title, they'll move to foreclose on the property owner because they're delinquent on their taxes. And from there, 2 years after, but the investor who purchased that certificate has up to 7 years. After 7 years, they cannot make a claim. So between 2 years to 7 years, they have 5 years to claim that. Number 13, when do real property taxes become delinquent? This question is simply asking, when are your taxes due? By what date? Well, taxes are due by March 31st of the following tax year. So if April 1st comes around, the person is delinquent. Delinquent means they're late on the taxes, so they'll probably be fined additional fees and late charges and so on and so on. Number 14, the tax is excluded on capital gain from sale of a property residence if it was the principal residence for at least how long? You see, when they write these test questions, they are trying to confuse you. Clearly, people, we don't speak this way. So all these passive language is designed to confuse you. So let's simplify it. That's capital gain. And theoretically, you have to pay taxes on capital gains. But if the property was your primary residence for 24 months within the previous 5 years, you get to exclude up to $250,000 if you are single, or $500,000 if you are married and filing jointly with your spouse. Number 15, what are real estate taxes based upon? So here we have real estate taxes are based upon the assessed value. Number 16, how is 20 mils written in decimal, presumably? Well, again, remember what I said. You will move the decimal point 3 places to the left. Mils are written in decimal. You will move the decimal point 3 places to the left. So you will start with the decimal point after the 0. You will move it 3 places, so therefore you will add a 0. So that would be 0.020. Keep in mind, millage rate is per $1,000 of value. So 1 per 1,000. So 1,000, that's 3 zeros. So that's why you're moving the decimal point 3 places. Number 17, mills are written in decimal. You will move the decimal point 3 places to the left. So you will start with the decimal point after the 0. You will move it 3 places. So therefore you will add a 0. So that would be 0.020. Keep in mind, millage rate is per $1,000 of value. So 1 per 1,000. So 1,000, that's 3 zeros. So that's why you're moving the decimal point 3 places. Number 17, what is necessary to qualify for the $500,000 exclusion from capital gain tax realized from the sale of a principal residence? We discussed that. If you are married, meaning a married couple, you're filing jointly, and you've resided in the property for at least 24 months in the previous 5 years, that's how you would qualify for the full $500,000. But if you are married and filing separately, each individual will be qualified for $250,000. But if you are filing jointly, you are eligible for the full $500,000. Number 18, what does the 10 mil cap apply to in Florida? Well, in Florida, the Florida Constitution requires the city, the county, and the school board district not to charge more than 10 mil. That is the maximum each one of them can charge. So if you combine them all together, it would be a total of 30 mil. But each individual, the city can charge 10 mil. That's the cap, meaning the maximum, the ceiling. The county can charge 10 mils, and the school tax district can charge 10 mils. And if you understand, public school, your school system or school system in Florida and just around the whole country is paid based on the taxes from that community. That's what pays the school system. Number 19, when a property owner does not agree with the tax assessment, what is the proper order for a review? So here, what they're saying is if the property owner does not agree with the tax assessment, the individual can do what? What is the proper steps to get a review? Well, number 1, they must make an appeal with the county tax assessor first. Second, they'll go to the value adjustment board And lastly, if they're still not getting the result that they desire or they don't agree with it, they can appeal the Value Adjustment Board decision with the circuit court. That's simply that. That's the process. But you must first start with the county assessor, the Value Adjustment Board, and then appeal to the court. Number 20, how would a new sidewalk that adds value to properties on the block be paid for? Well, that would be paid for by special assessment taxes. Keep in mind, special assessment taxes are taxes that are paid for basically if the government fixes something on the street, the sidewalk, or even the sewer system, anything that the government does, or the drainage system for that street. If it adds value to properties in the neighborhood or on that block, well, the properties on the block will share the costs of the pay for it. So that is it. And again, as always, don't forget to please subscribe, share, comment, and like. And yes, I want to say thank you for those who have subscribed and helped me. I appreciate it. To be honest with you, I expected this to be a little easier path, but it's not. So far, I think we're on our way to 500 subscribers, and I thank you, those who have helped. And please, I would like to grow the channel. So your help is definitely requested, and I appreciate you. Please, if you find value in this, please subscribe and share with others. The idea is to help people attain their goal, their dream of becoming a real estate agent. And if this helps you, perhaps it might help someone else. Please share it. Okay. And thank you for watching, and have a blessed and productive day. Have a good one. Bye.